Why do you keep repeating the same mistakes in trading, even after you promised yourself you wouldn't do it again? Pause there. Sit with that question for a moment. Because if you are honest, this is not a beginner's problem. This is not ignorance. You already know what you're supposed to do. You know when you overtrade. You know when you enter too early. You know when you move stops. You know when you revenge trade. And yet, you still do it. Welcome to Intentional Trading. This channel is not here to give you another strategy. It is here to pull you out of randomness and into structure. If you are tired of repeating cycles you swore you were done with, you are exactly where you need to be. Now, let me say this clearly, and I want you to hear it without defensiveness. You are not inconsistent because you are weak. You are inconsistent because you have no system that forces consistency. Traders love to blame psychology. They say, my mindset is the problem. But psychology is not the root. Psychology is the symptom. The real problem is that most traders are operating without a structured feedback loop. No execution audit, no behavioral mirror, no system of review, no enforced reflection. And without review, behavior never changes. It only repeats. Let me take you deeper. The human brain does not learn from intention. It learns from feedback. If an action is not examined, it is stored as acceptable, even if it was destructive. The market does not punish you consistently. Sometimes bad behavior gets rewarded. Sometimes good behavior gets punished. And if you do not have a review structure that separates process from outcome, your brain learns the wrong lessons. That is why you keep repeating mistakes. Not because you are emotional, not because you lack discipline, but because nothing in your trading environment is designed to correct you. Think about this. Every professional system in the world runs on review. Pilots debrief flights, athletes watch game footage, surgeons review procedures, businesses audit performance. Yet traders, handling risk, probability, and uncertainty, think they can just remember what went wrong. Memory is not a system. Hope is not a system. Motivation is not a system. And discipline without structure collapses under pressure. Let me show you the invisible trap. Most traders judge themselves based on profit and loss. Win equals good, loss equals bad. That single distortion alone guarantees stagnation, because once outcome becomes the judge, behavior becomes irrelevant. You stop asking, did I follow my model? And start asking, did I make money? That question will ruin you, because consistency is not built by outcomes. It is built by repeatable behavior, and repeatable behavior only comes from conscious execution plus structured review. Here is the uncomfortable truth. If you are not reviewing your trades, you are not trading. You are gambling with memory. And memory lies. Memory edits. Memory justifies. Memory protects ego. Memory forgets pain and exaggerates skill. That is why traders swear they usually follow rules, yet their accounts tell a different story. A trading journal is not a diary. It is not where you write feelings. It is not where you complain about manipulation. A real journal is a behavioral record. It answers brutal questions. Did I follow my entry rules? Did I respect risk? Did I wait for confirmation? Did I exit according to plan? Did I interfere? And most importantly, was this trade aligned with my model, or was it aligned with my emotion? Without answering those questions, you cannot improve, because improvement requires diagnosis, and diagnosis requires data. Now listen carefully. Consistency is not something you try to be. Consistency is something that emerges when behavior is constrained by structure. Let me pull you into how intentional traders actually grow. An intentional trader does not ask, how much did I make today? They ask, how well did I execute my model today? That shift alone changes everything. Because now, even a losing day can be a successful day if execution was clean. And a winning day can be a failure if rules were violated. This reframes your nervous system. It teaches your brain that obedience, not profit, is the objective, and once obedience becomes the reward, consistency follows. But here is where most traders stop. They journal for a week, maybe two. Then life happens. Losses happen. Fatigue sets in, and they abandon review because it feels tedious. This reveals something critical. You don't abandon journaling because it doesn't work. You abandon journaling because it exposes you. Review strips away excuses. It confronts you with patterns you don't want to admit. It shows you that the problem is not the market, it's repetition of behavior. And repetition without correction becomes identity. Let me say that again slowly. Repetition without correction becomes identity. If you overtrade repeatedly without reviewing it, you don't just overtrade, you become an overtrader. If you revenge trade repeatedly without review, you don't just revenge trade, you become reactive. This is how traders build losing identities without realizing it. Review is not optional. It is the mechanism by which identity is reshaped. Now let's talk about backtesting, because this is another misunderstood pillar. Most traders backtest to find confirmation. Intentional traders backtest to find boundaries. They are not asking, how much can I make? They are asking, under what conditions does my model fail? That is a professional question, because when you know the limits of your model, you stop forcing it. You stop trading boredom. You stop trading hope. You stop trading noise. And once again, consistency emerges. Notice the theme here. Consistency is not about willpower. It is about environment design. Your current environment allows bad behavior, so bad behavior repeats. Change the environment, and behavior is forced to change. A structured review process does three things simultaneously. It exposes behavioral leaks. It trains pattern recognition. It stabilizes your psychology. Why? Because uncertainty shrinks when structure increases. When you know that every trade will be reviewed, you hesitate before breaking rules. When you know your stats, you stop panicking during drawdowns. When you see your data, fear loses its power. This is how professionals trade calmly, not because they are fearless, but because they are informed. Now let me address something subtle but powerful. Many traders say, I know what I did wrong. That sentence is dangerous. Knowing is not the same as correcting. Awareness without structure does nothing. The market does not reward insight, it rewards execution. That is why repetition continues. Correction requires a loop. Plan, execute, review, adjust, repeat. Remove review and the loop collapses. You remain stuck in execute and hope mode. And hope is not a trading edge. This is where intentional trading separates itself from the noise. We are not building traders who feel confident. We are building traders who are measurable. Traders who can explain their losses without emotion. Traders who can sit through drawdown without panic because they have data. Traders who trust their model because it has been audited by themselves. Let me speak directly to you now. If you are tired of starting over, if you are tired of promising yourself, this time will be different, if you are tired of emotional cycles, the missing piece is not another strategy. It is a system of review that turns experience into intelligence. Until you install that, the market will keep teaching you the same lesson again and again at increasing cost. And the market is patient. It will wait for you to learn, or it will drain you while you refuse. This channel exists to pull you out of that loop. We don't chase pips here. We build structure. We don't trade feelings. We trade models. We don't hope for consistency. We design for it. If this perspective resonates with you, you already belong here. Subscribe to the channel, not because of hype, but because this is where traders evolve from reaction to intention. In the next episode, we'll go deeper into why the market always seems to move right after you exit and how misunderstanding context keeps traders perpetually late. Until then, review your last 5 trades, not the profit, not the loss, but your behavior. That is where real trading begins.